Ladies and gentlemen, hello. Welcome back to another video. Today I would like to recap our last video, talk about how BTI played out in the past couple of weeks, and then toss around a few other ideas for stocks that I find interesting and I think you may also find interesting. It might be worth a look. So first off, let's actually bring up the weekly charts. This is what I had you looking at last time. This was our $47 massive level of resistance that I thought would not be breached near term. We were looking at the RSI, which was tapped out, and really this was just a crucial level. So as you can see, played out pretty much as we expected. Um, I would have said that was almost inevitable. Take a closer look here at the daily. We tried. I tried to exceed that level, but I think at the end of the day, everyone and their brother was probably taking profit here, so it really wasn't in the cards. Add to that, the war with Ukraine broke out somewhere in here, and things got ugly. But really, that was just a catalyst to bring to pass something that was inevitable, anyways. Um, so I actually ended up entering this just below 40, and I exited today right here at this daily level. Currently, I'm just watching. Our RSI did completely reset here. This is our daily chart, our daily RSI reset. I really think the risk to reward is looking much healthier for an entry and a longer term play. Um, of course, there's always the possibility that would pull back to somewhere around in here. 37, I think, looked tantalizing. Yeah, 37 and change looks like a possibility on the weekly, but I wouldn't expect us to pull back much below that. So really, it's up to you. Do you think the risk to reward is worth it? I think so. It pays a healthy 7% dividend, and the worst is behind us for this one. So BTI, right here. This is what I'm looking for. Retest of 40. I'll re-enter it and see what happens. I think it's an attractive risk to reward. Next, I want to mention CHWY. This is one I've been following for a long time, since it was back here in the channel. Um, I actually bought this level here at 47, did not play out well. I ended up making a small profit, but I did, it was a stressful time for me. Now I'm still watching it. We're below the channel, rejecting the channel, and so the PE ratio here is actually very high. Their profit is low, that's why. Sometimes dipping into negative territory. So there might still be some room for this one to pull back. I really like the $28 mark. That's probably where I'll enter for a long-term hold. For now, I'm watching. Um, just wanted to throw that out there. CHWY is known for its internet retail. It focuses on food and merchandise for pets, and that's sort of a growing trend here in the U.S., probably worldwide. I'm not sure. But definitely here in the US, the anthropomorphization trend is only getting stronger, and I think that'll benefit CHWY. But I would say look for more of a pullback. I think the market still overall has a little bit to give. When that does happen, CHWY seems to follow the market pretty closely right now, so CHWY will give up some of its value with that 28, 28 and change is the mark that you're looking for. Now I want to look at ThyssenKrupp. This is a German steel company. Really interesting play. Actually, one of my German friends pointed this one out to me. I've been watching it since. I have not entered a position. Basically, okay, a little bit of backstory here. ThyssenKrupp is a very old company dating back to, well, here's the history. It's like the 1800s. Yeah, okay, 1811, the beginnings. What I want to mention is back here, 1933, after a sharp rise in government demand for arms, also determines the production focus of Krupp and Thyssen. ThyssenKrupp produces mainly semi-finished products and thus intermediate products, which are used in the arms industry. In the course of the war, the production of grenades is added. Krupp produces in particular guns, tanks, warships, and projectiles. blah, blah, blah. That was 1933. That was the buildup leading to World War II. It was pivotal. It was a crucial instrument for the German government in making that happen. That has changed since. I'm not going to bore you too much with the history. If you're interested, you can find it here. ThyssenKrupp.com/en/company/history gives you a very detailed entire history of this company. Um, so it does have this weird ticker TKAMY. That's because it's traded on the German stock exchange. This is our vessel to be able to trade it here in the United States. But since World War II, this company transitioned to producing steel things for the civilian industry. It does not manufacture military arms anymore. The reason why I'm watching this one is look at it like a gamble, like a lottery ticket. There is a chance that because the German government has already released a statement saying they plan to exceed 2% GDP in an effort to really bolster their military because I think they're sitting at like 100,000, 190,000, I'm sorry, ill-equipped um, soldiers right now. That's basically their entire military. Um, they don't feel too confident about that with the war in Ukraine, thinking that it could spread. I think there is potential for this company to once again re-engineer itself for a war effort. If that does happen, the potential is there for this one to really, really explode. Um, when the German government mentioned that it was going to look to bolster its military strength, that was somewhere around in here. Um, I think it was here actually. So boom, boom, we spiked on the news, but now we're right back to the level, and we sold even below it. So you're not paying a premium based on that news. That's already worked itself out. We're back to just normal valuation for this company. I think I may have already mentioned I haven't entered yet. I was really hoping to enter at this level. I missed out so far. If we get a true test, I'll probably enter. I think this is our worst case here at 560 based on what was that, the weekly? I think it was actually the monthly. That's our worst case scenario, but if um if I am correct in my guess, again, this is a gamble. This is high risk, all right? Um Not like a blue chip dividend paying company. This is high risk. I want to make that clear, but the potential is there to really really see some nice gains on this one if you're willing to stomach the risk. Um, if we're looking at a pullback from 9.5 to the 5, I mean, what is that, a 50% pullback? I think the gains potentially could far outweigh that. And I don't think that the fact, if they happen to not um, reinvent themselves and go back to arms manufacturing, I don't think that'll be a catalyst for collapse. Um, but I do think there is a potential catalyst to really see some good gains. So that's why I think the reward to risk is attractive here, but you make that decision for yourself. Anyways, that's what I have for you today. If you guys found this beneficial, or if you have, well, if you found it beneficial, consider leaving a like. I would appreciate the support. If you have questions about anything, how to get started, if you want me to look at anything specific, make sure you let me know in the comments. I will be happy to take a look in future videos. And yeah, I'll be eager to hear what you guys are expecting or would like to see in terms of content. Anyways, take care, stay healthy, and happy. Catch you in the next one.